A live look at the Federal Reserve now, where the Fed will make its decision on interest rates. It is that day, top of the hour. We're going to get that news. Meanwhile, Kevin Warsh moving a step closer to the Fed chair post. After clearing the Senate Banking Committee, his nomination now goes to the full Senate for a vote. So let's bring in our Fox Business contributor, Lou Basenese, and Solus Alternative Asset Management strategist, Dan Greenhaus. Thanks to both of you. A little bit limited on time here with a lot of breaking news, but give us your expectations for the top of the hour.
The good news is there's no news coming from this. There's not going to be a cut. Everyone knows there's not going to be a cut, and we're just waiting for the political theater to end with Powell and to transition to Warsh. I think the surprise is going to be people are expecting Warsh to be very dovish, and I just don't think, if you look at his policy and his history, he's more naturally a hawk than he is a dove. So I don't think he's going to fall in line with the president.
The important thing for people to remember is that the Federal Reserve, despite how we talk about the chairman or the chairwoman or the chair, is not a dictatorship. And even if Kevin Warsh comes in and wants to slash rates dramatically and quickly, there's still 11 other members of the Federal Reserve Board who have a vote, and he's going to have to do his best to bring along a group of people that thus far don't seem too inclined to reduce interest rates, at least for now.
All right. What does it mean for everybody's bottom line? We're still in that environment where a lot of folks are looking at affordability. They still want to see those prices come down. We're still looking at gas prices high due to the war. So what does this decision mean for
I think it still means the uncomfortable, right? Prices are going to stay, rates are staying higher for longer, which means mortgage loans are staying higher. Those rates, auto loans, credit card rates. I mean, our favorite tool, the Fed Watch tool, the CME one, is not pricing in any cuts this year. I mean, it's a fractional percentage. Not until we get into January of next year do you see any expectation for a rate cut.
A lot of those would be home buyers or sellers, for that matter. Keep watching these rates. They want them to come down. Does this mean no more movement in the housing market? What does it mean for that?
The housing market's been stuck in neutral for a long time. High rates is part of it. Affordability is part of it. The fact that there just aren't enough homes, we've talked about this in the past, is part of it. And as long as rates stay up here, the bigger issue that we just mentioned was credit card rates. Most people run balances. That means the interest that you're paying every month stays high. It's for now. This is where it's going to be, especially with what's going on in Iran.
All right, let's hear what Jamie Dimon has to say about inflation.
I'm not worried about it, but on the list of scenarios would be lower interest rates, higher interest rates, and higher interest rates with growth is one, higher interest rates with inflation is one. The worst case is stagflation, and I just wouldn't take it off the list.
Are we talking about that now, Lou?
It feels like this comes back around every 3 or 4 months, but I just don't see it in the underlying data now, right? I just don't. You're seeing a still strong U.S. consumer. Inflation is a little bit higher than where people want it, but it's still under control.
So are you still bullish on the U.S. stock market, Dan?
Yeah, I think you probably have to be. Although, again, if something happens in the Middle East, the Strait doesn't open for a longer period of time, and oil prices go up, some of these gains are going to evaporate.
All right, how about you?
I'm super bullish. Look at the earnings growth rate. We're accelerating earnings growth for 2026. And most importantly, if you strip out NVIDIA, the other unmagnificent 493 are going to outpace the Mag 6.
Well, so here's what I always do. So we're 19 minutes out from the Federal Reserve interest rate decision. Pop up the big board, because you always want to get a snapshot of where we are before the decision. And here we are down 320 points. But it's that news conference that will be held half past the next hour that could be the newsmaker. But down 321, but still right there near record highs, Dan.
Despite everything else, the stock market is basically at a record high. And to Lou's point, it's not just NVIDIA, it's not just Apple, it's the entire market's doing very well.
All right, we'll be watching for that decision about 19 minutes away. See if it's a market mover. Thanks to both of you.
Thank you.
Appreciate the time. All right.